I'm Owen Bigland. This is the Inside Edge video blog. Okay, happy Saturday. Time for one of my investment blogs on the mindset and everything else you need for success, the ones I enjoy doing the most. So, as you guys know, I've done a few blogs here. The stock markets, and for that matter, the Vancouver real estate market, it's all doom and gloom out there right now. Is the Vancouver market headed for a major correction? Interest rates are going up. Inventory is slowly creeping up. The bottom, is going to drop out of this any day now. Nothing has changed. I mean, you guys know I've been listening to this for 35 years. 35 years, it's been the same rhetoric here. Vancouver real estate, it takes these run-of-the-mill corrections. Sometimes every 10 or 12 years, we get something a little more of 15 or 20%. If you own a house, enjoy it. If you've bought a property to invest in and you've got a tenant in there, as long as you've got a good tenant in there, you've got nothing to worry about. Take advantage of these low interest rates we're enjoying and are going to continue to enjoy for a long time. Yes, they're going up, but we're still in a interest rate dreamland as far as I'm concerned. You can always lock in a 5-year fixed at any time. Enjoy it, or if it's a principal resident, enjoy the home. But when it comes to the stock market and, the Vancouver real estate market, as I pointed out many times as far as listening to the news and the mainstream media, it really is just a giant charade. The media is, as you guys know, is really fear-based. Fear is what sells. They want to scare you into doing something dumb. The stock market's going to crash, sell everything now. Look what they were telling you at COVID. They told you to sell your home, sell all your stocks. And then, of course, 6 weeks later, the stock market and the real estate market went on an epic rip for the last 2 years. Nobody knows what the market's going to do in the short term. Buy quality Vancouver real estate and hang on to it. Call it a day. Enjoy the home. Pay it down. Maybe down the road, buy an investment property, put a tenant in it, let the tenant do all the heavy lifting, like I've been blogging about for years here, or if you read my book. The stock market, it moves at a much quicker pace than the Vancouver real estate market, and there's a whole lot more coverage on the stock market, especially the U.S. markets. Watching CNBC or Fox Business, people need to realize that, this is just purely entertainment. That's all this stuff is, these talking heads that go on these programs, telling you to buy this, sell that, this is going to crash, this is going wrong, the economy, the Ukraine. Tune all of that stuff out. Take the advice of some of the greatest investors we've ever known, like Warren Buffett and Jack Bogle and Peter Lynch. These guys will all tell you the same thing. Just buy the indexes, buy the S&P 500, buy the Triple Q. If you have an inkling and you want to learn and you want to spend the time, do your own research and buy some high quality names like an Apple or a Google or a Microsoft or a Johnson & Johnson or the Canadian banks. Build a balanced portfolio, maybe some that pay you a nice dividend and increase that dividend, maybe some growth stocks on the other side like the Apples and the Googles. Make it age appropriate or risk appropriate. All the information you're going to need to build a portfolio like that is available for free online. Canadian couch potato is one that I've thrown out many times. Buy and hold these indexes and these high quality names and call it a day. If you want to spend half an hour here or an hour there watching some of these financial programs, go ahead. But remember, most of this stuff is strictly for entertainment purposes only. And, these guys, for instance, on BNN that come on to that, the couple of shows they have where they do their stock picks, Market Call Tonight, and it's the same thing on CNBC, these so-called experts, these panels that they have on. Keep in mind here, folks, most of these guys, these traders that are, running portfolios, the vast majority of these guys cannot beat the indexes every year. 85% of them are falling behind the S&P 500 or the Triple Q or the TSX 60. So don't play that game. It's all entertainment. It's just to keep you engaged and buying and selling, and that's because that's how these guys make their money. These guys are running money for clients and charging 1% probably, or 1.5%, or maybe they're a hedge fund charging 2 and 20, which should be outlawed, 2% management fee and 20% of the profits. These guys never beat the indexes over time. They might get lucky here and there, but why play that game? And it's the dirty secret of the financial industry. Just buy quality companies, index invest. When the sell-offs like this happen, and you're still in your accumulation stages like I am, you should welcome these, because you're buying shares at better prices. You're buying more shares for the same dollar. The only people that should be worried in markets like this are people that are retired and drawing down the portfolio. But if you read my book and the dozens of blogs I've done on how I've structured my finances, I never want to have to be in a position to draw down stock, sell stock to retire on. Instead, I've built a portfolio of real estate that pays me my rent checks every month from my tenants. And then I've created a large stock portfolio that the majority of my holdings, not all, pay me a dividend quarterly. Some pay me the dividend monthly, that I can live on comfortably just on the dividend flows. And sure, if I decide down the road I want to take a trip around the world and go to Italy and go on a cruise for a month, if the markets are strong, I'll sell $20,000 or $30,000 of Bell Canada. But I don't need to retire on, and that's called bulletproofing your portfolio. You guys should aim for that as well. Try and create a large enough portfolio that you never have to sell or draw down a portfolio. You can live off the cash flows. Or even these retired folks that are doing a drawdown, maybe a 2% or 3%, if they've got the right financial planner and they've done this correctly, that financial planner would have them in 12 to 18 months of cash reserve, so that they wouldn't have to start selling stock when the S&P is down 24%. They could use their cash reserves to see them through for 6 months, a year, up to 18 months, until those prices recovered, which they always do, and then start to sell stock again. So if it bothers you guys what your portfolio is doing, as I've said before, don't look at your portfolio. I still look at mine. It's down tremendously, but I go in there because I've got dry powder coming in on a weekly basis, and I'm looking to put it to work. I'm not trying to time a bottom. I'm just systematically continue to buy in companies and ETFs that I think are at good value. And I'm pretty confident that some of the stocks I've been buying lately, I don't know what's going to happen in the next year or two with these, but I'm pretty certain that over the next 10 years, the price I'm paying today will be far more in 10 years. And that's all that should matter. Stay the course, buy, sell. History has proven that this formula will work. I've been doing it for over 34 years now, and it's worked tremendously for me. And I've been in some tremendous drawdowns. In my book, I talk about, my portfolio was cut in half in 08 and 09. After a couple of years, though, 3 years, it got back up and I recovered. And I was buying when those depressed prices, which later supercharged my returns later on. Same thing during the COVID correction. That was one of the sharpest I have ever seen, where my portfolio dropped about 35% in a matter of about 6 weeks, but ripped back up just as quick. Again, I was lucky enough to be able to buy some shares, everything I could during that 6-week meltdown that turned into being incredible buys. And we're going through the same thing here. It's par for the course. Markets, the S&P 500, have a look at the chart, the 60, 70, 80-year chart. Same thing with Vancouver Real Estate. It's not always a rocket ride up. There's going to be dips and corrections along the way. It sets the stage for the next leg up. And as I've often said here, if you focus on some dividend income as well, that will help you stay the course, because on paper, it's not a loss unless you sell these shares. It doesn't mean anything. But if you've got the right companies that are paying you a nice quarterly dividend and increasing it every year, like say the Canadian banks, that revenue, that income is coming in every quarter, rain or shine. It doesn't matter what the value of the underlying value of your portfolio is at. Those dividends will keep the cash coming. And that's the bottom line. When you're buying stocks, you're buying companies. The stock market isn't an enigma, which a lot of people think it is, and it's rigged and this and that. You're buying high quality companies. When you buy Macdonald's, you're buying a share and you're getting a piece of every hamburger and egg McMuffin and coffee that they sell. That's what you're buying. You're buying these great American and great Canadian franchises. Always keep that in mind. And if you buy the right companies, these high quality names that I've mentioned so many times in passing, they get through this. These good companies tend to continue to be good companies. Now, if you bought the wrong companies, if you bought the meme stocks, the AMC, the GameStop, some of these tech names that I've never heard of, that Peloton would be another one. You do not want to go anywhere near those type of companies. They're not profitable and they never will be. They were just basically a scam, is all those companies were. Pump and dump. That's all they are. And that's never changed, and it will never change. There'll be more of these companies in the future that will try and attract you with crazy growth and everything else. They'll go up and they'll crash down just as quick. I'm Owen Bigland. As always, thanks for watching. Thanks to all my new subscribers. I just crossed the 9,000 subscriber mark on my channel here. And thanks to all the people that continue to buy my book on Amazon. I'll see you next week.